Number 4 on our list is consider equipment purchases that get Section 179 deductions. And this one's my favorite as a podcaster and videographer.
Ordinarily, when you buy assets for your business, the amount you spend for the asset can't be deducted in the year that you buy the asset. It has to be depreciated over the useful life of the asset. For example, you mentioned a camera. Let's say you buy a $1,000 camera. Now, ordinarily, you'd say, I'm going to write off that $1,000. But the IRS comes along and says, no, can't do that because the camera has a useful life of more than 1 year. So you got to spread the value over the useful life. That's called depreciation. So let's say the useful life of the camera is 3 years. So you spend $1,000 on a camera. The IRS says you got to write that off over 3 years. So you got $333 per year for 3 years to claim the deduction.
Let me ask you a semantic question. There can be an argument made that with the life cycle of tech, a year is really only the usefulness of some of these cameras these days.
That depends on the specific asset, Josh. I had an IRS guy tell me one time that my tax library that I spent about $3,000 or $4,000 a year on, going back 35 years, tried to tell me that I had to depreciate that library over time, that I couldn't write it off all in 1 year. My response was the library was obsolete, updated every single month. And my subscription was a yearly subscription to keep this library current. After 1 year, it was totally obsolete. Of course, I won the argument. In your situation, it depends on the asset. Certain cameras may be obsolete after 1 year. And if that's the case, it's fully deductible. Certain other cameras may have a useful life of more than 1 year.